Hello friends, good weekend and good week ahead. How are you? This is Vladimir and this is the weekly review for the last week of May 2013. First of all, I would like to apologize about my cold voice. I'm still sick after the entire week. Uh, it will be okay. I will try my best for the next weekly review to be completely fine. You have my promise. Last week was very interesting week with the first time we saw a serious drop down in the markets, and it all started in Japan. And well, the expectations were very high, and everyone started to expect that's all. Here we go. Europe and USA probably will follow, but USA as USA is still on a very optimistic, positive mood. We saw drop downs. Let me show the chart, for example. That's the Dow Jones. We saw it for 400 points drop down on a two days period, and well, actually, half of that is already recovered on Thursday and Friday. The question and the biggest question is that are we in the beginning of the bearish cycle? I will explain my point of view here. So let's start, as we have probably a lot of things to cover. I would like to start with the yen pairs. That's some period I am talking about the dollar yen and other yen pairs as a bearish cycle to come. My suggestion was always not to trade it but to invest on that. For one more time, I would like to explain quickly what's the difference. When you trade something, you put some clear risk, like 1-2% per every trade, per some stop loss. When you invest on something, you do not use stop loss because you make an investment, right? And in this case, buying the Japanese yen, and of course, to have the ability to hold your investment, even on the days when it's going against you, you should not use a stop loss, and you should not ever use the most risky tool we have in the forex market, and that's the leverage. And exactly the opposite is the right. You should use negative leverage. Negative leverage means trading lot sizes that are much smaller than your account. Right? That's the idea behind the dollar yen. I am still on my opinion that the cycle is about to come. You have to understand something. The Japanese government is all about pushing and improving the environment. They will continue to do that, but they cannot do that one way. It's too risky, and they never want to risk their process, right? The thing they try to do, their experiment. So they pushed so hard. They most likely will release a bit right now. Most likely will go to the bond market, and that what should cause the dollar yen and other yen pairs, and of course the Nikkei where is that? Here we go. No, sorry, that's not Nikkei. Here, that's the Nikkei. Okay, to release it a bit and make some correction down. So in my opinion, the last weekly candle, as you can see here, which ended like a kind of a kicker, kind of an engulfing bearish candle pattern, should be the call that the cycle is coming. Even if for any reason it pushed to the next high, like 104, 105 for example, we already have, if you pay attention here, 1, 2, 3, 4 highs in a row on the Bollinger Bands, right, and we have 4 highs going down on the moving average histogram. This is a bearish sign, and it means that from here, this range, a cycle is about to come. Now the question is how deep it could be. Well, the weekly 20 may, of course, is the first range. We have 100 as a very psychological level. Then we have the 98 range approximately, and then of course the lower band of the Bollingers should be the target, which means it could drop down to 92, 94 range. There is another thing to remember. Do you remember my which I was talking about for 3 weeks, I think, or something like that. That's the one, right? Based on that, it should drop all the way to here. But if this pattern is for real, the drop should take us back to this area, and that could be 90 again, 92, 90, right? It's pretty much the same. So technically there is a lot to go. How much the Japanese government will let it go and will release, only time will tell. Technically, we should be looking on a sell opportunity. Now, how should we join it if you are still out? Sorry for my cough, sorry. Hard to talk and while I'm so cold, sorry. If you are still out and you're not investing in that, you should be looking to invest. If you want to trade it and not invest, now that's the opportunities we most likely have. That's the trend line we have on a daily chart. As you can see, it tries to build here some wedge, right? Not the big megaphone, this wedge. We have 1, 2, 3, 4, 5, 6 right now. The break could happen on a 6, the break could happen on a 7. We could go a drop down here, a push up, and all the way down to this wonderfully strong place, and I'm talking about the 96, 98 range, right? The numbers I talked before. Alternatively, go to the shorter terms like 4-hour chart and look to sell the pullbacks. One thing we should remember, and it's very important, this resistance has to hold, and I am talking about 102.20 up to 102.70, even 80 range, 50-60 points range. It has to hold in order to gain the next bearish momentum. That's my opinion about the dollar yen. Conservatively, it has to break, pull back to retest the wedge I just showed, right? And then push down, or alternatively look to sell every pullback on the intraday with much smaller protection and bigger potential target, but on the same time it's riskier as the daily pattern will still be broken. Euro yen, same story. As you can see right here, from one side it is building something that looks like a wedge which tries to be broken right here, but from other side it might be very early and this wedge could be like this, right? This wedge could be like that, like this. So the 130, so psychological level, has to break for the euro yen to gain down. Watching on the weekly chart, we got pretty bearish patterns, but as I said, it might, that's the visit of the bears. That means that the market is ready for a cycle. It doesn't necessarily mean that's all from here, 100% guaranteed down. No, it looks very bearish, okay, but it still could try to make another last push during a so powerful divergence on the weekly chart before making the drop down. Anyway, based on this continuing divergence, also our 20 MA is the first potential target. Then trading after the boom, I remind you, right? You have a post on the blog, you can follow that. Trading after the boom says that find the two spots, and after a boom on one way, look to trade the correction. In other words, the pullback down to 123 and even 120 is very possible. Will that happen immediately after this week? Not sure at all. Take a look on the monthly chart. You see the monthly chart? Okay, everything's still bullish. So we might, this is the last, right now we are in front of a last week of the month. We might see another push up. Then during June, maybe July, creating the top and then making the correction I am talking about, the cycle I'm talking about. Of course, I can go and talk about more and more yens. I will not do that, as it is all the same pretty much. One of the impressive movers, by the way, is of course the Australian yen, which is also a wonderful opportunity to be in thanks to the Australian, not mainly the yen, thanks to the weak Australian. The next interesting opportunities I see are Euro Aussie and Pound Aussie. In my point of view, very, very, very interesting. Why? Well, first of all, they're finally moving up based on the monthly direction. Seems like the market wants to go higher. I remind you, that's a monster divergence here on the monthly chart. That's resistance number 1, that's resistance number 2, that's resistance number 3. On future, we will see Euro Aussie here again on future. But I'm talking about monthly chart. That could happen 1, 2, maybe 3 years. So it's pretty far. On the shorter term, what do we have? We have very interesting situation right now. We have a bullish convergence forming, not formed yet, forming live right now. For that, it has to create another high. But on the same time, there is something to remember. One, we are out of we are out of you're also here. We're out of daily average true range channel, which affects a bearish pressure automatically. We are out of weekly average true range channel, which is also bearish sign. Watching on a daily chart here, we can see we have 20 candles plus, right? And we have a continuing divergence. RSI is aiming the top. Now, once it brings, well, from my point of view, it's time to be in for investment, not to trade it yet. We can trade something only when we have combinations of charts. Here, investment. As investment, I do see a pullback first of all. The pullback could be back to the 20-minute, back to the opposite band, and back to even the 200 moving average. All of that possible. Right now, with the RSI on the top and with the next candle pattern, red candle pattern you get, it's time to jump in. Very low risk, as the pair is under heavy bullish pressure for a longer run, and to enjoy from the cycle to come. The cycle could start right here or on any of the weekly next resistances. As you can see, this is the current resistance. The next one is a bit higher, around 136. The next one is a bit higher, around 139.89 actually. So this range will cause the wonderful pair to stop and to create a bearish cycle. There's another very interesting thing to pay attention to. Watch on the past, okay, go as long as you want, and watch the rises. Okay, you see the waves. Pay attention to the length of the waves. Okay, you see? They're pretty much the same. Pretty much the same. Of course, you cannot say that that is going to be on the peep, not at all, but most of them pretty much same length, right? As you can see. And I'm talking about the up moves, not the down moves. There is one more thing to remember. Australia is very, very, very related to China. The situation in China is not that good. That's why for long run, Euro Aussie most likely will continue to rise. But, and here is a big but, the Australian interest rate is still stronger than any other. Which, in other words, means Australian is still more attractive than anything else. Between the majors, of course. That's why, in my point of view, a cycle is about to come. The same I can say about Pound Aussie. Wonderful ride, wonderful continuing divergence. RSI is playing around the top, bend to bend on a weekly chart. We can see we have many resistances on the range. The current range between 156 up to 158, 59, maybe a bit higher to up to 161. That's the range for the mid-term cycle. I do see that dropping back to this line, like trading after the boom. I can see easily 300 or so points correction. And this is my opinion about the Pound Aussie. Pound Kiwi, we can say same story. Let me just find it on the list. Pound Kiwi. Here we go. Right? We can say pretty much same story. It's forming a divergence. It's not that there yet, which means it could push a bit higher to 188, 190 to the 200 moving average. Then most likely we'll make a correction, and then based on the monster divergence, I do expect it to push higher, much higher. So on the midterm, look for sell opportunities. Enjoy the swap. Enjoy the small cycle. But remember one thing: we should not trade it. We should invest in that. If you decide to go, of course. An investment means very low risk, right? And when I say very low risk, I mean trade lot sizes which is much smaller than your account. Okay, so if it goes against at the beginning, you don't get to accept. That's the main idea. And now let's go for the other pairs we love so much. Euro pound. Euro pound. If you watched Laszlo's previous week review, he was talking about the push up. The push up actually happened. Now Euro pound, in my point of view, is an opportunity to look for a buy. Still. Now, why do I think so? This is the 4-hour chart. It completed 5 ways. 1, 2, 3, 4, 5. Now it's making most likely 1. It will make some correction 2, and it will make some correction 3. Pay attention to this line. Right? That's how it should happen. Up to this level. Down to this level, sorry. Around this range, which could be 080, 520, that could be 084, 70, even if we take the line through the spikes, it could be all the way here. It could go and create a bullish hidden divergence. There, I think it's a buy opportunity. From my point of view, this zone has to hold, and that's a 08460, 08480 range. It has to hold for the euro pound to gain the up move. If it breaks this range down, we are going most likely all the way down lower than 083. After this push up, I would expect from the pair to stop something like in this range and to push another time to the downside. But we will have the opportunity to talk about that on the next reviews, right? What about the euro pound, the euro dollar and the pound dollar? Well, you know how bearish I was about the pound dollar. I was talking about it from here, if you remember. 156, 157 should be the way to sell. It actually happened. We are 600 points lower than that. 500, sorry, points lower than that. Now, the question is what's next? Right now, it's a bit concerning. That's a bullish hidden divergence. Watching on a weekly chart, the pressure is amazingly still bearish. And I think we will go lower. And this bullish hidden divergence will not last too long. That's my opinion. Also, because we have now a bearish convergence on a daily chart here. So, sell the rallies. If you know what I'm talking about. If you don't, go to Amazon, click Sell the Rally by the Valley, and that's my book about convergences. That's exactly what we have. We should be looking selling the rally. On the 4-hour chart, that's the rally going right now. This rally could take us back to 151.70. It could take us back to 152.30, or maybe even the 153, 154 range. Up from these levels, sell. Based on weekly and daily pressure. This 154 level is the last level of the protection. Euro dollar is a bit trickier. Watching on a weekly chart here, right? The picture is not that clear. I think still down. And the main reason for that is not technical. The main reason for that is fundamental. Strong euro is bad to the eurozone, and they will work to reduce its value, to decrease its value. So we should be looking to sell every rally as well. Right here, I am not that convinced about the euro dollar. There are two things should happen. One, a break here below this very strong support, which is 129, and we get the bearish call, or alternatively a push up back to 130 plus, and then look for the next short-term divergences and make the sell. If it continues to go, watch out the daily 200 moving average and look for combination of a daily hidden divergence that could form. It's not there yet, it could form, and the 4-hour chart divergence, the basic divergence to come, and that could be a very nice combination. That's my opinion about these two, Australian dollar and New Zealandian dollar. Well, Australian dollar, you know my opinion, I'm still very bearish, but, and here is a big but, be ready. Australian dollar is a big suffer right now. It suffers a lot. I think it has more to go, but it is creating a very powerful bottom. Why? On a weekly chart we have several monster supports on the way, as you can see. Each of these supports could make a stop and a huge pullback. We know how much Australian can pull back. We know how strong it is. Combination of weekly Bollinger Band duplication after the break, 1 or 2. Combination of RSI that could go for extreme. Last time it happened was here in 2008, and we all remember what happened since then. Right? Now, it could happen on any time, so be very careful there. And of course, the weekly continuing divergence started to form. I think it's early yet, but be ready. The next support, with the combination of weekly and a daily divergence, as I showed, could be this, the call to buy the Aussie dollar. And to buy that means enjoy several hundred points upside. New Zealandian dollar, I'm on the same opinion. You know how bearish I was and how bearish I still am on the New Zealandian dollar. Sell every rally. Alternatively, sell flags. That's a flag on a daily chart. Break and hold below. That's a go to sell. The next level here, 079.30. The next level, 078 plus, the one I was talking about. Final level, 075. Or even lower. Sell every rally. In case New Zealand retrace up and push higher, 082.50, 083.30, that's the range to look for a sell for the New Zealandian dollar. And how about the combination between them, Australian and New Zealandian? For a few weeks I am talking about a bullish cycle to come. I'm still in the same opinion, and I told you this could still drop a bit lower. Take a look. That's harmonical pattern. This harmonical pattern could stop on any range of here on the next weeks. From here, much more to go. Take a look also on the channels. We're out of average true range channel, daily and weekly. It's a pretty strong sign. On a daily chart, more than 20 candles high, which never pushed back to the opposite band, now are going for another low. That could be 119, 118, maybe even a bit lower, before much deeper push back. We have 1, 2, 3, and now forming a 4 lows in a row. That's another sign. So far, it's moving a bit against, but it is creating a very strong cycle. Be ready for a buy opportunity. I mean, for a bullish cycle. And around 119, 118, maybe a bit lower, that will be another great opportunity to look for. Increase the buys to enjoy the cycle. That's my point of view. And of course we come finally to the indices. I promised I will not let it go, right? Indices. Weekly, guess what we get? Weekly dodgy. Annoying, isn't that? Annoying very much. Except the Nasdaq and the S&P, right? We also can call it dodgy. It's not exactly a pattern. Friends, I was talking about indices for several weeks now. You know I'm bearish, and you know that I said not once. The longer we continue through May, the worse it is to the economy. This doji is, without any doubt, a visit of the bears. It's not just closed positions. It's a visit of the bears. We saw how sensitive the market is for every word coming through the mouth of Bernanke or Kuroda or whoever it is. In my opinion, that's the first visit of the waves. It could still try to create another high. It could still try to create another high. We are under heavy bearish pressure. After this doji, this is not question of if. This is question of when only. Watching on a monthly chart, you remember my claim here, right? You're watching on a daily chart and a weekly chart, the picture is the same. In my opinion, what's about to happen is that after this small combination, it might try still push a bit higher, but it should break it down and take us back. The first back should be this trend line, which means something like 15,000, maybe a bit higher. Here, two things could happen. One, bullish hidden divergence to form. Two, a break of this line and a push down. The next push down could take us much deeper, all the way back to this trend line, which is around 14,500, and to create a bullish divergence there. In my point of view, look for sell opportunities, not buy. As an investment, also I think it's very clever as an investment to hold sells, not buys. And I know right now it sounds crazy, I know that, but remember what I always say, I never look to be right. I'm looking for the opportunity to make money. Right now I'm losing money on this rise up. When the cycle comes, I will be exactly on the opposite side. Be careful with this sign we are seeing right now live on the weekly chart and the daily chart. It's very bearish sign. And don't forget, we have 17 candles right already. 3 more weeks on the top here, and that's 20 candles right on weekly. That's what happened in 2009. We got then first pullback of 1,000 points, and then almost 2,000 points. On 2011, also we got 10-11 actually. We got 20 candles right. We got several pullbacks until the big one came, and that's 2,500 points. What's about to come from here? Every cycle is bigger and bigger. Will we get 3,000 now, or 4,000 points? Time will tell. But as for now, that's pretty strong signs of the bears being inside the market. About the DAX and everything else, I'm on the same opinion. About the DAX, you remember I was talking about this harmonical pattern several weeks ago. We got a bearish candle pattern for the first time on the harmonical pattern. That's a bearish call actually. But again, I think it's better to go as an investment and not just as a trader. It still could try to go for few more weeks and create another high. Yes, it could, but that's already a visit of the bears. Swiss index, which is one of my favorites, we got very good combination here. As you can see, MACD pointing down now, divergence everywhere, 20 candles right, very good sign for the Swiss index as well. My recommendation on the big value indices like Swiss, DAX and Dow Jones and Nikkei, those who are above 7 or 8,000 points, be very careful. Trade the smallest lot size you can, because 1,000 points move is like nothing to these pairs. It's just 10% or so. For some indices lower, for some indices a bit higher. 1,000 points is nothing. So be very careful with choosing your lot size. On indices like S&P or the DAX, or the Nasdaq, of course it's different because they are not that strong value yet, right? And of course the Nikkei. Well, but about the Nikkei, you know my opinion. I was talking about it several weeks ago. This is not a question of is that a bears or not. Of course it is. Every pullback is a sell opportunity. 20 MA first, opposite band second target. That's all, friends, for this week. Thank you very much for watching this video. About other interesting pairs like dollar ZAR, dollar Turkish, and exotic, I will update you on the blog when I see something more relevant. It's not relevant yet. And of course I will be talking about them on the next reviews again when they come more relevant. Once again, thank you very much for watching this video. I'm sorry for my voice and for the fact that you heard me when I'm sick. Sorry. So I wish you all wonderful week, good trading, successful trading, and I'll see you on the next week. Thank you. Bye bye.